David Morgan is an expert on silver, gold, and precious metals investments. He's a world-renowned lecturer appearing on CNBC and the Fox Business Channel. He's an author, having penned Get the Skinny on silver investing. And Mr. Morgan is a regular contributor and friend of the Ellis Martin Report. David, welcome back to the program.
Thank you, Ellis. Great to be with you.
Do you think we've hit the tipping point in an upswing for gold and silver?
Yeah, pretty much. I think we're probably going to get some kind of correction or a whapping from the powers that be, because they can still move the paper market around somewhat. But I think this normal summer doldrums, middle of August, is low kind of thing. I don't think that's true. I think the low was hit when silver dropped from that high of 50 down to 33 and change. I think that's the low. And now we go from 40 to, say, 36 or something. That's a higher low. And that's it as far as I'm concerned. The only thing that would change my mind, and I have to stay open-minded, is that if we really get into a debt liquidation depression, and copper is showing that, by the way, so that's why I'm hesitant. Copper is indicating, a huge global slowdown. And the fact is, silver is bipolar. It does money and industry. And if there's a big industrial, shakeout, it could affect the silver market for a while. Now, I believe, but don't know, that the monetary demand would, move up and replace it rather quickly. But, it's because I believe it doesn't make it true.
What can we expect for silver now? Will silver at all follow gold, or gold follow silver?
Yeah, I believe that silver will probably lag gold for a while, but its ultimate monetary aspects will come to the fore. Let's face it, when you look at it in the final analysis, a gold coin is spendable anywhere in the world, but the same can be said of a silver coin. And most of the people will come to silver as a means of preserving their wealth or a means of final payment, are not really concerned with the industrial usage. They're concerned with what works. And since there's so many more people that are not that wealthy, but still are concerned with their own financial well-being, that'll put a huge demand on the silver market. In fact, the demand's really infinite. And I don't say that lightly. I've really thought it through. In fact, one of my fellow researchers and I discussed this. In fact, he brought it to my attention, because really what you're saying is the demand for money is infinite. And I think that's true. I mean, not that everyone is greedy and wants all the money they can have. That's not what I'm saying. What I'm saying is that the demand for a better life, better lifestyle, or whatever is very, very big. I mean, there's a difference between what we need and what we want. Wants are pretty much unlimited. Needs are much less than a want. That's what makes the world go round, is the creative capacity of mankind to make new things. And, I didn't want an iPad until I saw one, right? I don't need one.
Who has the ability to buy all these items right now?
Well, no one. I mean, I should say no one, but not very many, and less all the time. And, maybe I didn't make the point. The point isn't so much of what's available as a want. Basically, let me go back and make it succinct. A long time ago, I said we're moving from a condition where we're going from an age of things that we want to things that we need. And people are not going to buy an iPad. They're going to be buying food, water, shelter, and fuel. And any of these extra items are going to be, nice to have, or maybe I want it, or maybe I wish I could get it, but it's out of the realm of possibilities for me now. My wife lost her job. My income's been cut, or even my income has gone up slightly, but it doesn't buy as much at the grocery store. So the reality is, like it or not, we're moving into an age of things that we need, not things that we want. So hopefully I made it more succinct this time, because that was my point. The idea that there's unlimited want still exists, but that doesn't mean it's going to be fulfilled.
Our audience is interested in investment opportunities, David. Where are those investment opportunities presently?
Well, unfortunately, I think there aren't many. I think with this near tipping point that we have seen, with the first time that the GDP is less than the amount owed on the national debt, we're at a point where no nation state in history has ever been able to pay off the debt. In other words, any time that a nation has been in the position where their total gross domestic product was less than the debt owed, they've never come out of it. And that's where we're at now, we meaning the United States of America. And because of that, it's going to be awfully, awfully tough. Now, I think if anyone could do it, it'd probably be the United States. But just because we could do it doesn't mean that we would do it. And that's the problem. I think we're in uncharted territories. You see Bank of America is down 20% today. The S&P is off about 6.5%. And we are in a situation that, unfortunately, the markets are reacting in a very, very strong manner, saying, you know what, we're in trouble. We're in trouble here.
Well, I'm extrapolating from your tone and your words the word collapse. Is that a relevant word?
That's, I've used that word so many times, and I don't like the word per se. I think it's one that's overused, and it's probably overused by me and many. And, it depends the connotation that an individual has. I mean, we all communicate, and we think we understand each other, and we don't. Communication really isn't that good between human beings, generally speaking. But on point, yeah, the collapse started really August 15th, 1971, when Nixon closed the gold window. Now, that would be a measuring stick for me, and, we're almost at the 40th year anniversary. We're 1 week away from that anniversary date. But the collapse is accelerating, is the way I would say it, Ellis. And is it going to get to a total collapse? And that's the real question, and the answer to that, I believe, with everything I've got, is no. I am just too big a believer in the human spirit, man's ingenuity. It isn't like this hasn't happened before. In fact, if you study monetary history or history at all, this is a repeat performance. This is Act 4 of a 4-act play, or Act 12 or whatever. I mean, the point is that, look, this type of thing has happened throughout human history, and we've always come through it, and actually, in some cases, better for it. The problem with human history is people don't learn the lessons of history. If people really understood what happened in the Weimar Republic, we wouldn't be in the position we're in now. But it seems like fearless leaders, Bernanke et al., don't get it. Or if they do, they're certainly not going to talk about it. They're pretending. If they know it, they're not talking about it. If they don't know it, which is the way they're acting, they think they can create something for nothing, and that never works.
If the GDP is in the territory you alluded to earlier, and if there's nowhere to go, where is there to go?
Well, the only place to go is if you're in a situation where we're in, where you are not trusting the system and you're looking at default across the board, default in the currency, default in the bond market, choose your flavor, default even in equity markets or the preferred share market or anything, you go to the one place that can't default. And the one place that can't default is the precious metals. I mean, it's the only monetary asset outside of the system that's outside of the whole, matrix. In other words, that is the last means of payment, and there's no default. There's no counterparty risk with gold or silver. Everything else that's in the financial world has a counterparty risk. Is the guy going to make good on his promise? And if the idea is that I don't know, then more and more money is going to be seeking that means of final payment, that fact that, I've got something so substantive, so substantial, and so proven that I don't have to worry about any counterparty risk. And, of course, that moves money into gold. I mean, we're up $50 today, basis that kind of sentiment in the market.
With interest in gold and gold ETFs, do you think the tipping point to the upside will happen for these junior mining stocks?
Wow, that is really the toughest question. The answer is not yet. I believe because of the fact that the general equity markets are under such pressure. I mean, as I said, the S&P last time I looked was down 6.5%, and the DJI was off 630 points. The NASDAQ was off, as I said, it's 174 points, and on we go. So this has put pressure on the gold stocks. From my measurement, and I hope I'm on a website that's updating correctly, but the XAU is actually off about 3 points today. Now, some of the gold stocks today reacted to the upside, as you would expect with gold at $50, but not across the board, not in the manner you would expect. And the reason for that, I believe strongly, is gold stocks are stocks. They're not gold. Gold is the most negatively correlated asset to the general market, but not gold stocks. They're still stocks. So if you have weakness in the general equity market, gold stocks generally will follow the equities themselves, and that's what's happened. Once we bottom, or even before we bottom, doesn't have to be a general equity bottom. It could be somewhere along the line where people say, well, I want to buy gold. A lot of people, when they come late into this market, buy gold stocks thinking it's gold. I mean, my aunt is a great example. Love her dearly, but she's never owned gold in her life outside of her wedding ring and, her bracelets and her jewelry, so she owns gold from that aspect, and that's really owning gold. But she thinks she owns gold by owning a junior mining company I told her about years ago. She doesn't own gold. She owns a gold stock. But a lot of people don't think in those terms. They think, oh, I've got Gold Corp, or I've got Agnico Eagle, or I've got Glamis Gold, or it doesn't exist now, but you've got all kinds of gold stocks out there. They're buying gold, and in a way, they're buying a derivative of gold, but that's good enough for them. So I believe that in probably before the next 3 to 6 months, I'll go out as far as 6 months, you're going to see a turnaround in sentiment, regardless of what the market conditions are in the general equity markets, where people are rushing into gold and silver, and they're going to do it through the equity market. So I really still think strongly that you're going to see good opportunity in the mining shares, but not yet. I would be a cautious buyer here. I've told people that subscribe to go ahead and buy through this, but keep plenty of ammunition ready, meaning keep plenty of cash available in case they get even cheap.
Tell us about your website, silver-investor.com.
A couple ways to get there, silver-investor.com, as you said, or themorganreport.com. In either case, you can sign up for our free information, which is weekly. And when you sign up, you're on the autoresponder, and we'll give you the 10 rules of silver investing that I wrote well over a decade ago. It's good for the amateur or the pro or anyone in between. We also give an economic update on a weekly basis. And if you're beyond that situation and you really want to get serious about this market, we have 3 levels of paid service. A basic look over my shoulder service where I show you how I see the markets, primarily the metals, but also talk about the dollar and the bond market, the general equity market from time to time. And then we have an advanced service for basically hedge fund managers or very large net worth individuals, where it's a once-a-month consultation service. Again, you can start with the free list, see how I write, see what my economic thinking is like, and make a decision from there.
I've been speaking with the silver guru, David Morgan of the Morgan Report, and silver-investor.com. Listen to this segment again on the podcast page of our website, ellismartinreport.com.